How are y'all doing today? Bag FX back again with another video for y'all. Today's video, I'm gonna be going over the open breakout range or the open range breakout. It's a nice, quick little scalp. This is a scalping setup. I do want to say that right away. Um, you get in real quick and you get out even quicker. But basically, if you're gonna mark it out, you want to mark out 9:30 to 9:45 Eastern Standard Time, New York. And you want to take a 1 minute I trade the 1 minute now. This strategy was taught on the 5 minute chart that when you get a close above the range or below the range on a 5 minute candle, then you take your entry and you target. Me personally, I like 1 minute candles. I'm more comfortable with the 1 minute chart. I can use my uh, market bias slash direction with these trades. So if I think it's going to go down, but I know I'm in a bullish market, then I'm like, okay, then I'm going to really wait for a close. That being said, this is Friday, November 17th. We did not get a candle close above this open range all the way until what time was that? Basically, lunch, going into the lunch hour. So this candle, this trade, I wouldn't have worried about it too much because we're so far gone from the breakout range that I wouldn't have taken this. But the rules still do play in effect. Once we break it, target at one to 1.5 risk to reward. So let's go back to Thursday. And here we go. Let me take this off. This auto shit. So here we go. We have our range right here. Let me change its color so y'all can see it a little bit better. We have a range right here from 9:30 to 9:45. We have a 1 minute candle that has closed above the breakout range. So then once you get one candle closed, that very moment you put your order at this said price, whatever that breakout range closest breakout price is, you put your order there for in that direction for a buy. This white candle came back down, tapped us in. You do have a fair value gap as well. So I put my stop below the fair value gap as if I was going to take the trade from the fair value gap. And then all you do is target. This one was a 1-2 based off the stop loss, but you want to target about 25 to 30. I'll put it to you like this: $20 to $30. Nothing more, and get out. And get out. So this would be a Thursday. Let's take a look over here at Wednesday. Let me make this better color. All right, so here's Wednesday, 9:30 to 9:45. We get a 1 minute candle that closed below on this one candle, this white down closing candle right here. Very next candle, we get tapped in right here at the breakout price. We put our stop above the most recent swing. So we had a low, lower high, lower low. So this would be our lower high. We put our stop at the swing here. And then here is where we target our 1 to 1.5. I don't know if this one was a 1-2. Well, nah, it wasn't. But we do 1 to 1.5. Like I said, between $20 and $30. This one was 23. Yeah, I never got really back down there. So that was Wednesday. And this is all this week. And that would have been a $23 move. So on NQ, NQ pays about $20 per dollar move. Times that by 23, you would have had $460 on one contract right here. ES. ES has a little bit different rules. So let's finish up NQ and then we'll go look at ES real quick. So here we go. Another fair value gap right here. So this would have been a different trade, a fair value gap. We get a breakout. This just really just a trend continuation trade right here. But you get your breakout of the open range. Get that first candle that closes above this white candle right here. You get tapped in on the gray candle. The very next, we put our stop below the swing right here. And this is a fair value gap, so we put it on the fair value gap. And we target a 1 to 5, 1 to 1.5. And as you can see, we hit another 1 to 1.5. That's Tuesday's trading action. And let's do Monday. We'll do a 1 week and then we'll go to ES so I can show you the difference. Because on NQ, like I said, you want to target 20, between 20 and $30. It's a real quick scalp play. It's a real quick move. You get in and you get out. You secure a quick bag, a bag. Build your confidence up going into the next trade, going directly into your London, not your London, your ICT silver bullet trade between 10 and 11 o'clock. This gets you hyped for the next one, and it will give you a touch on where the market may be going. You might be able to get a pulse on the market because you're trading it early. So we get our close here on this white candle below the open breakout range. We enter in on the next candle. We put our stop above the last little swing high. We got a high, then our little low, high before we went low. So this would be our swing. We target a 1 to 5. Now this one was a loss. Sorry, the magnet. This one's technically a loss. It did not get to 1 to 1 to 5. It got to 1 to 4.3. But hey, if you could be up, what is that, $19? So what's that, like $400? And let it close negative, or what is this stop loss? $13. So 160. That's a $560 swing. I don't know. I feel like people would secure profit. Like if you see $400 and then we get back down, and then you see negative, and then you get back down and you see pushing wicks, I'm sure people would have to get out at break even or secure like $50. But this was a loss. Doesn't matter. Let's go look at ES. So let's do Friday. All right, perfect. So I haven't done ES at all. So let's mark this up together then. 25 to 30. We got this low. Pull this up. It's 930 high. 945 low. We want a 1 minute candle close below. So this one would have been a loss. As you can tell, we don't even got to really stare at that one. All right. Here's Thursday this week. 930. 945. Pull this up to the high. Get a 1 minute close, candle close right here. So what is this price? This price is 2050. Get our close right here, this candle right here. Stop below the swing. $31 to 5, and then get this on the right. This was at 20.5. Not 20. Oops. There we go. And pull this to 1 to 5. That would have been a quick 1 to 5. Now on ES, you really only want to target $5. You want to have a $5 move, and that's it. That is it. So let's do Wednesday. Let's really zoom in. My bad. Wednesday. So 9:30. Boom. 145. Here's our trading range. That's our high. Our low. We get a close here. The entry was 21.50. Boom, 21.50. We put our stop above the swing right here. Target at 1 to 5, which, as you can obviously tell, it did not make. It made a 1.46. Again, real quick, you want to target, like I said, $5 at the most. We got 470 on this one, so that would have been another loss. Now let's jump to Tuesday. Tuesday's already looking like a winner, just off site. Here's our trading range. Right here. We get a break. Candle close. Basically, this candle gets us in right away. So I'll just put it right here. And then let's stop. So now if we have a big swing low like this, what you want to do is you want to do your stop at a $5 stop, because we're targeting a 1 to 5 at the dollar, like $5 at the most, right? So that's where our stop would be. Boom, this one would have hit. Let's see. Let's go down here and find Monday. All right, we got our range set out again. So again, 9:30 to 9:45. We wait for a 1 minute candle closure outside. We get it right here, so we know we're in for a sell. We put our stop above the last swing, and there's a fair value gap at $5. But we do the last swing, target $5. As you can see, that was a fail. So Monday loss. This is why I trade NQ too, by the way. Monday loss, Tuesday win, Wednesday loss. Yeah, Wednesday loss. Thursday was a dub. Friday was a loss, but that came after the London, so that doesn't matter. So 50% win rate of the week. You 4 trades, 1 win, or yeah, 2 wins, 2 losses. For ES, NQ was 4 wins out of 4 trades. Friday there was a no trade day, basically. Um, but yeah, that's the strategy. Feel free to check it out, try it out yourself, and let me know what you think. Y'all take care.